Hello, everybody, and welcome to the Leaders in Supply Chain podcast. I am your host, Radu Palamari, Managing Director of Elcat Global.
Very happy to have two great guests with us, both from the SoftBank Vision Fund. We have Anna Lowe, who's an investment director, very active globally, but in specific with a focus on Asia Pacific. And John Hong joining us from Silicon Valley, from US, also an investment director, very much active in North America. Both of them have overseen investments in the logistics, transportation space from SoftBank side. And very excited to have you both here today with us to share more. So welcome, John. Welcome, Anna. Glad to have you.
Thanks for having us, Radu.
My pleasure. So first, maybe let me give you one minute of sharing in terms of the latest. And John, maybe I'll start with you because you've had the latest investment, right, that you've overseen in ShipBob specifically. Maybe tell us a little bit about that, how it went, and some ref points.
Yeah. So maybe I'll start a little bit higher level, right? Transportation and logistics has been an important part of both the first Vision Fund and the second Vision Fund, having invested a lot in mobility and also logistics across both funds. We obviously look to diversify our exposure, but have seen a good application around our core for the application of AI and data to global leaders here. Obviously, SoftBank has had a long history in e-commerce, dating back to some of the most famous investments that Moss and SoftBank are known for. And as a result, we've done a lot of work in the sector, not only on the e-commerce platforms directly, but the companies that support them. And so when we look at a sector like logistics, we look at multiple areas. And as we kind of think of our thesis here, it's really been driven by the consumerization, right? Both from the e-commerce side, which then flows back into logistics, where people want things faster, cheaper, better. And what we're really focused on is helping to democratize e-commerce for both consumers and merchants. And so, one big trend that we've seen over time is the rise of DTCs, or direct to consumer brands, right? And these brands themselves have a bunch of great entrepreneurs that are looking to build their own products and sell them, and tools have come up, right? From AWS to Shopify, and we think e-commerce enablement and logistics is another key area, right? You as a DTC brand have created your product, you go out and market it, but you're not a logistics expert, right? And so when we looked at the space in terms of areas of value and choke points, e-commerce fulfillment came up as one of them, and ShipBob was a company that we spent time with, along with some of their peers, right? One big thing that we do in our diligence is to try to get to meet everyone and be able to compare and contrast their various models, and be able to make our own inputs into what we think will be successful. And so, there are multiple aspects that we liked about ShipBob. I think one of the first ones is actually their full stack solution, from being a software provider for a platform of e-commerce fulfillment to actually operating some of their own warehouses, right? This, in the end, e-commerce, whether on the front end or back end, eventually involves the movement of physical goods. And so the movement of these physical goods requires operational excellence. And what we've seen here, obviously, is an acceleration in the past year, right? COVID, with all of us unfortunately stuck at home, continuing to order more and revealing the necessary parts of the supply chain where they're choke points, right? And even the biggest platforms last year struggled, right? Things around lack of capacity, having visibility into your supply chain have all been important things. And companies like ShipBob allow both merchants and consumers to have that sort of visibility. By having a fully integrated full stack approach, are able to provide the 2-day shipping that we've all come to expect, and also at a price that we all expect, which is effectively free, right? And so for ShipBob, we saw a really interesting, attractive end market in supporting e-commerce, and just this continued drive to quicker deliver it at cheaper prices, but with also a better experience. The company obviously is growing super fast, which is something we're all focused on as it relates to investments at the Vision Fund. Growth is very important. But importantly, they're actually having a strong profile, a margin profile, and a path to profitability. And so Shabab has had the great combination of growth and profitability and kind of a durable moat in terms of being integrated, having a merchant application, a warehouse management system that then also helps drive operational excellence and therefore allows merchants to offer a better experience to the consumer. So, and all of this, of course, is underpinned by data, being able to help those merchants move inventory to the right spots so they can actually then have cheaper shipping, right? Because if you remember the movement of a package, there's a part of it that costs to store it and then to move it. What's interesting by being integrated here, you can actually help cut the cost of delivery by moving it closer. But then you need to predict what the demand will be for that product there, right? And be able to have high visibility into the inventory. And so their data and platform help merchants do that.
Yeah. Thank you for that, John. Anna, how about Asia Pacific? So, I mean, specifically for the market that ShipBob addresses, we don't yet have a big player here, but maybe.
And I think I want to go back from my vantage point, being based in Asia, and John alluded to kind of the history of how we started and what sectors we were putting bets on, and I think going even to the broader logistics and mobility space, one of our first investments into mobility and two of them, both of which predated the Vision Fund, were into Didi from China, Grab from, well, if you include India as well, Ola. This kind of our biggest bet into mobility and rideshare was initially to solve the transportation and people movement issue, given the lack of options in those geographies. And those investments occurred in between 2014 and 15. And you fast forward that, I would say probably 5 years later, in late 2019, early 2020, I'm based in Singapore, so I'm closer to our portfolio Grab, who's headquartered here. So I'll focus on that. You see them going really deep into thinking about, in terms of service offering, other than transporting people from point A to point B, what are the other things, such as, food delivery, moving, what we call Grab Express, moving packages, and just being able to provide those different types of last mile logistics, whether it's people or objects, parcels. And it's interesting how that kind of now is all converging together, in the sense that, what Grab, the type of express services that Grab or a Gojek provides, is not in direct competition with, the express logistics providers that have been serving the e-commerce platforms. However long e-commerce has been around, they're quite complementary to each other, given the geographic differences in each of the cities. It's down to really local on, do you need things in 3 days time, in 2 days time, or a 2-hour window? The consumers have become so discerning that, they're, before the consumer is just waiting for the package to arrive at home. It's not up to them. It's up to how the sellers and the platforms could arrange the actual delivery. But now, like John said, with the use of data and technology, being able to monitor every part of that parcel journey, is now both platform sellers and buyers have the option of, hey, I want something in the next hour, or I want something in the next 30 minutes, or I want something, I'm fine waiting for 4 days because I'm more friendly about, saving boxes and, don't want to have carton boxes piled outside my house. Or, I want to save on shipping costs. I'm not in a rush. And this whole point about, I think, on specifically on Indonesia, given the topical nature of the islands, the concentration of population, sellers and FMCG companies now with the use of technology and data are able to better allocate their inventory to be as close to where the demand is. So you're seeing a lot more efficiencies on that front.
Absolutely. And in terms of big picture trends, right, we've got this question, right? So what do you see happening at a macro level in this space of, well, whether you call it mobility is, I guess, is the bigger word, but then you narrow it to transportation, logistics, last mile fulfillment. What are some of the big areas of development you see, and you will also probably closely invest in at SoftBank Vision Fund?
Yeah. I think one of the key trends that we've seen in the last year is people want things faster, right? It was more difficult in the past year to go out and get it physically for yourself. And so, another company that I invested in, GoPuff, right, has been focused on delivery in under 30 minutes of, a select number of SKUs. And that's, more unique in the US. I know that has been possible, probably more in Asia, and Anna can obviously speak to that. But the growth of platforms like that have been really important, because you used to be able to get in your car, obviously, go down to the corner store and get whatever you want. But when you're forced to stay at home, you still need something immediately. And so we've seen companies like GoPuff really have strong tailwinds from that. And that's just, an acceleration again of the trend of, wanting 2-day shipping 15 years ago when that first started free, to now wanting things faster. But the other interesting trend on the service side is we used to take for granted that it was, in a just-in-time economy, when everything worked well and you don't have boats getting stuck in canals and places, that things will just show up on time. And I think last year it also proved to us that that's not a given anymore. And so there's a real operational excellence where people are able to deliver in adverse conditions. You want to make sure you have neutral players within your supply chain, right? Ones that may or may not prioritize others over you, that it's even keel playing field for those delivering your goods or handling them. I think one of the things that's actually more recent we're seeing is obviously the trend within labor cost. And so we've obviously invested a lot around automation and robotics over time. And this is becoming front and center, right? Before, I think you were able to hire a lot of people and to work in warehouses and to deliver goods. And that's obviously gotten more expensive. That's happening within our portfolio. That's happening within the general economy. And so, with us investing in companies like AutoStore, which is warehouse robotics and automation, or even delivery self-driving platforms like Neuro that help augment, right, this rising cost of labor, and to supplement it to help find alternative solutions to continue to, drive down the cost of moving a good. So those are probably some of the bigger trends we're seeing right now in the US.
Yeah, so I think out of Asia, especially in Southeast Asia, you will see us as a technology investor, the pace at which we deploy capital into, tech-enabled logistics space, now that, we placed out bets in mobility, will probably come at a slight lag to our US teams, just given the core infrastructure in the countries in which we cover. They don't develop, they're in the stages of development, as opposed to, the US and Europe's having proper roads and proper railways and established, shipping lines. And COVID hasn't helped with that. But for the time we've placed coverage on the ground, which was about starting 2 years ago, we definitely have seen very interesting emerging startups providing very specific digitized solutions for, whether it's freight forwarders or trucking companies that were really just purely operating from the telephone or pen and paper. So really helping that, providing the basic digitized solutions for those players. So I would say for our target stage and area, a lot of these companies probably have not reach the scale at which we would make an investment yet. But I would say the big trends, there's definitely lots of new companies that are trying to serve the express logistics, the trucking companies again. But we're also seeing specific logistics companies that are, quite established in, say, a particular part, whether it's in 3PL, whether it's in particular geography, they're starting to vertically build out this, okay, let's bring in resources to build a brand new warehouse management system because we already have a base customer, because there's no kind of the type of the US and European imported solutions is probably too sophisticated for what the market needs here. So you're starting to see some of these more mature companies starting to develop that in-house to basically to upsell to their existing customer base. I think in terms of kind of looking for automation and kind of new innovations in robotics, probably that's from, I think, Vision Fund as a whole on the global level, kind of the priority geographies for those type of investments will likely to come from US and Europe.
And that brings, and we've had some question alluding to that. So what's your criteria? I mean, maybe for many of the startup scale-ups listening to this, right? I mean, I'm pretty sure that you get pitched on every minute of the day, right? So of course, SoftBank has a reputation, and you've written some large checks, you've made some great successful bets. But how do you choose the shipbob versus, the other potentially similar startups? What are some of the criteria that, and maybe it's interesting, it might be also slightly skewed depending on the region, right, John and Anna? But tell us a little bit about your, how do you make these decisions on invest or not invest?
Yeah, I would say for us, right, in Mas's view is that AI is going to be the next revolution. And so the application of AI and data is first and foremost in our framework, that there are a lot of interesting companies that will generate returns for investors and have a lot of positive good, but they may not involve AI and data applications. And then, there will be the right pools of capital to pursue those. That's just not within our mandate. Within that too, we're also looking for market leaders, right? Disrupting large areas, either within a region or eventually globally, right? That these trends that we've touched on today and in other sectors that we invest are global, right? And they impact a lot of people and bring a lot of good to people in those regions that they touch. And within that, we're growth investors, right? We're growth stage investors to late stage. And so we continue to look for companies that have obviously generated traction, both generally on a revenue basis, but some form of traction in terms of the products that they're deploying, and are growing quite quickly, right? And for us, growth is also paramount. And I don't know if there's anything else you would add there.
Yeah, so category leaders, application of AI, of course. But I think given I cover a region where it constitutes multiple countries and cultures and languages, I think when we look at potential opportunities in, say, the English-speaking countries, Singapore, Australia, New Zealand, where we understand that, the founder teams there probably also understand that, they're building a product that's made to globalize or regionalize, and with the kind of English first product they built, naturally, they will aspire to go to the US or UK, the English speaking countries. So I think those will be kind of the countries in which we can find opportunities where they can become global. But whereas populous countries such as Vietnam, Indonesia, Philippines, what we found that the solutions have to be very localized. So having, John didn't mention about the people, the management team, of course, is of utmost importance as well. There is an emergence of second-time founders now, I think, in Southeast Asia. That's a really good thing to see as you see the whole ecosystem matures. We do take bets on first-time founders, but I guess it depends on kind of what kind of product and what kind of segments they're targeting. But we're seeing founders have become the kind of their caliber. We set the same standard globally for what we see in a founder. So I think it's we're very glad that we're beginning to see more and more promising companies there. Yeah, so I think what John mentioned about the ability to apply AI, in certain countries maybe too soon to talk about AI, and maybe 2 stages from what they're trying to achieve. But we're also working with them to build that path, and that's where our value add is as well. And I think what I want to address specifically, and there's always some market confusion in Asia Pac, especially, and I've dealt with that throughout my career at SoftBank. Is people are trying to figure out the different pockets of SoftBank. So in Asia, there is another entity called SoftBank Ventures Asia, which is formerly known as SoftBank Ventures Korea. They focus more on Series A and B investments, whereas we are Series C and beyond. So there's a clear, I think you won't see in the market, with these two entities going after the same deal. So there is I would love to say to founders that SoftBank does offer a great menu of options in terms of source of capital with our early stage entity, with the Vision Fund. We have SPAC vehicles, we have our public investing vehicles. So when it comes to capital solutions, if you're in the growth stage and you meet the criteria that John and I just talked about, come talk to the Vision Fund.
Exactly. To your point, Anna, and we actually, before we went on this call, I was telling John that I saw an investment yes, just yesterday. There's a company called Parcel Perform.
That's right.
And then
that's done by SoftBank Ventures Asia.
Exactly. So to your point, so there's very, very clear. Maybe you need to change the name. So you put, because SoftBank, I think people all immediately associate the big deals. But yeah, rightfully said, SoftBank Ventures, everybody watching does Series A, B. What John and Anna do, and SoftBank Vision Fund is Series C and above. So it's a different magnitude of deals. Both, of course, both funds very much necessary. I also wanted to show you this question, and Anna is going to be more for you, but I think it's relevant in the overall scheme of things. But Anna, you handled Grab, right? So this is the first part of the question, right? So has moved to so many different verticals: first, last mile services, fintech, And then this is the question. So my question: how do you assess the change in strategy for startups moving from what it was when you initially invested to some very different verticals? Or if I can maybe try to summarize or paraphrase, is like, how do you kind of accompany them on the journey of pivoting, right? Or expanding, and how do you help them decide what is worth pursuing and what is not?
Yeah, so we're there for that journey, and when we, especially at the stage that we invest, we know that, I think at the time, I think I alluded to at the very beginning when we first invested in Grab, it was two countries, a few cities, and just trying to move people instead of now it's just like you said, proliferation of fintech services. But so I think Grab, in the Grab case, is still mobility and delivery. So the use of this last mile logistics solution for people and goods will still remain at the very core of the business. And I think fintech, the evolution of that, fintech journey has really come to, as we think about, food delivery, we think about increasing cases. It's still a very much a marriage of offline and online services, because you need to get in a car to get from the A to B. That doesn't. I wish Grab provided teleporting services.
Whoever's gonna nail that, and not.
Yeah, well, some billionaires go into space first before teleporting happens. So that's why when we think about writing that first check at the stage that we go in, we do spend a long time with the management team pre-investment to map out what could be the 3 to 5 year vision for them and where they want to expand, and whether the check size we're writing for this point in time is whether that will help them realize the 2 year vision or 3 year vision or the 5 year vision. And obviously that's, the initial check size is a factor of, deal dynamics, other various factors that results in that first check. But that conversation about where the company could go in 5 to 10 years time happens very early. But no one has a crystal ball to the future on in 5 years time I exactly want to do that. There have been occasions where, yes, it might have to take a hard pivot to something else, or the company tweak the solutions, or increase the service line, decrease the number of services that it will offer. But I think largely in the Grab case, I think for the past, we invested in late 2014, it really hasn't, verged kind of off track. I think fintech has always been in that picture.
Yeah, I would just add, right, in terms of the previous question, when we invest in large TAMs with market-leading companies with strong management teams, often there will be adjacent growth areas that will always emerge, and Anna talked about some of them for Grab. But obviously, we also are here, just given the size of capital that we're looking to deploy to support these founders and their teams to invest in these growth opportunities, right? Because we very much see natural extensions of these businesses. You can look at some of the legacy investments in Alibaba or any others, right, that Masa invested in a long time ago, and sort of the derivations that have come from there. And I think we see that in many of our businesses, and we look to support them both in replicating their model, into other geographies, or moving into adjacent areas of their core business within their geographies or even other geographies. And I think that's one of the strengths that we have as a platform when we do end up partnering with entrepreneurs and their management teams.
And I'll stay with you for a second, John, because we kind of talked a little bit offline. But on the question that came regarding will SoftBank ever invest in an asset-heavy but underpinned by technology, the question was carrier, right? The shipping lines, the top ocean carriers of the world. Some of them are investing heavily on the technology side, on going digital, on analyzing and having access to a lot of data. But at the core, of course, they are still heavily asset focused. So would you, what's your thoughts on that?
Yeah, I think as to what Anna had spoken about earlier, right, around our framework, it doesn't differentiate whether it's asset heavy or asset light. Now, there are different capital needs, but if it sticks to our knitting of, the application of AI and data, and, as a market leading company where we see significant areas of growth in a big TAM, I don't think we would, off the bat dismiss it. So I think we would consider it.
Got it. And now coming a little bit, so Anna mentioned people, you alluded, and second time entrepreneurs. There's quite a few. I saw recently a map with I think it was the team that started Lazada 6-7 years ago, and now where they're not each, some of them are still there, but a lot of them have gone and set up their own things. I wanted to ask both of you, I'll start with Anna, when it comes to people, when it comes to selecting these teams, right, on top of, okay, this is almost like, what's your track record, right? So, okay, you set up something, of course, and it was successful, there's a better chance that you're going to do it again. Are there other criteria? Are there other, I don't know, secret sauces of how do you know that this is the right team, the right, founder, the right CEO versus, okay, maybe there's some issues there?
Well, I mean, there's definitely, I think within the Southeast Asia circle, like I said, there's an emerging class of second-time entrepreneurs, but I think the circle remains somewhat tight-knit, and a lot of the, I think a lot of, people who are thinking about startups, or people who had just started, they know how to now, with, the flat world we live in, they have mentors and connections, or business school classmates, whatever network you have that connects them back to Silicon Valley, to other parts of China, especially, as well. That's where we kind of see the knowledge sharing happening, and that actually makes everyone even more connected, in terms of just us having more data points and references, and getting to know the founder. And the founders are very accessible, whether they're physically located in Singapore, or pre-COVID they're quick 1 hour flight away. So I think that's us getting more information on the team itself. And for us, it's quite early on, and now we do it in a Zoom setting. But before, it's very telling when you physically go visit them. You kind of see how the founders think about corporate culture, and how they work together, whether there's a very clear, whether the founders can understand, because we're at growth stage. So I think when we come in, I would say maybe half the bench is filled. There are some roles where you can see some shortcomings still, just given kind of the fight for talent in this part of the world. But as a leader, not kind of always dominating the conversation. And I think that's what we like to see, in terms of just the founder knowing how to bring the best out of the immediate team he's around.
Yeah.
He surrounds himself with.
Yeah, I would just emphasize it, right? I think at our stage, there's more of an operating history, and so we can see how the founders have developed and built their teams. I think at also our stage, there's also thoughts around upgrading parts of talent, something that we spend a lot of time doing, right, and helping them there. But as Anna said, at least in the US, I would say not all of my founders that I've invested in are second-time founders. Some of them are first-time founders. And what you look for is just a lot of energy and belief, right? There are a lot of ups and downs. What people started off in the beginning changes over time. And then, where they kind of end up when they end up meeting us is, a testament to what they've built. And so every time I meet any founder, whether we invest in them or not, I'm always awestruck by how difficult it is for them to even get to that point. And so there's just a lot of respect. And then look, it's a two-way street in my mind, right? That, it's often described as a marriage. Sometimes people say it's longer than a marriage, because it's very hard to divorce your shareholders. And so from that perspective, there has to just be a good natural rapport, right? And we even see that within teams that we back, right? And who they interface with at the Vision Fund. Obviously, we have multiple investors and we have multiple teams and areas that touch each other. And some of them just naturally get along better with different parts of us. And that's totally natural, right? And I think that's the benefit of our platform, that there are multiple people that you can interact with if needed. So, and we all have sort of different judgments within that.
Yeah. On the topic of marriage, I remember 3 years ago, so I had on the podcast Chan Wen, who's I know maybe you know him, who's the CEO of NinjaVan, and I asked him, so what's one piece of advice that you would give for somebody wanting to set up their own company? And his first advice was, don't get married. So no time for that. So I said, okay, that's fairly extreme, but it is the hardest possible thing that one can do. I mean, I think it's maybe in this world where we've seen a couple of amazing success stories, people tend to estimate the amount of work that goes into setting up a successful company and scaling it. I mean, setting it up arguably is not not the most difficult part. The actual sustaining it over time in a profitable and good way is the difficult piece. So yeah, that's the marriage analogy. Final question from my side, and I wanted to ask both of you. It's a topic we've seen. You might have seen there's a report that came up on the, what we need to do on the sustainability front on lowering emissions. Transportation, logistics accounts for a huge chunk of that, right? And you guys have a lot of power to influence through the investments that you make, and there's a big leverage that you can have also across your portfolio companies. So maybe talk to us a little bit on that front. Of course, if you manage through, we manage as a human race through AI to properly do effective last mile, effective deliveries, that will lower tremendously the carbon footprint. So Tell us your thoughts on that.
No, I'm actually glad you brought that up, Radu, because when we talked about trends earlier, I think sustainability is one of those things that weave beyond just transportation and logistics, and something that I think is important at the corporate level and a personal level for me, and I think will become more and more important over time. And I think, like you said, AI and data applications actually have a great ability to help solve this. It won't be the only thing that will deal with it. But even one of our investments, so we invested in a company called Flock Freight, which is a digital freight broker focused on the less than truckload market. And part of what they do is they actually help pool shipments. So in a less than truckload, right, you don't fill up the truck. The big issue within trucking is actually there are a lot of empty miles, right? You drive out with the truck, it may not be full itself, you deliver it, and then you just drive home empty, right? And the ability to pool that, you can actually therefore create a win-win-win-win that I like to say. One, the shipper ends up paying less, the carrier makes more money because it can skip the hub and spoke. The consumer gets a better experience, generally get there quicker, less damage, and then you reduce the carbon emissions. And so Flock Freight actually is a B Corp, which in America means obviously it's environmentally friendly. They allow people to have carbon neutral shipping, which is great, right? Where they can offset it also through pooling. And look, it's a great margin product too, right? Because you are adding value, and this is a direct relationship to having data and the application of AI and just the digitization of, as Anna talked about earlier, a very old school system that has historically involved a lot of paper, pencil, and the phone. And so I think, other things that we look at within mobility, obviously within the ACES framework of wanting it to be autonomous, connected, electric and shared, all those things, right? I'm also involved with a company called Get Around, which involves car sharing, right? Like we don't need to produce a number of cars. A lot of cars end up just sitting in parking lots. Can you better monetize it? You can share these vehicles and therefore hopefully reduce just the amount of vehicles that we have to produce over time. And so, yeah, I hope that what we do is having a positive impact. Masa often talks about that, right? That happiness is actually a key component of what we do. So.
Okay, on my end, I get to do some plugs for SBG as a group, and I think as given our investments in the mobility space and as they mature and a few of them are already public companies, they do have very clear ESG targets. But just to address the environment front, I think, and this was fresh off the press from our earnings announcement 2 days ago, on our major subsidiaries, think about ARM, which is still a key subsidiary. They completed the conversion of 70% of electricity to renewable energy. On the SoftBank KK front, for example, by the end of this fiscal year, 50% of our base stations will be using renewable energy. And I think on our internet side in Japan, we will target to get to 100% of renewable energy for our electricity uses in 2 years' time. So those are just examples. I think for all of our list codes, they're very clear targets. An example on the mobility side in Southeast Asia, as Grab prepares to go public, they've also set up very clear targets on the ESG front. Like John said, they're using AI and technology to ensure that you take the most optimal traffic route. Our key shareholders in Grab, one of them is Toyota, and we have many strategic partners with OEMs such as Hyundai and Honda. So all these car manufacturers are very aligned to ensure that the vehicles that Grab uses, you're moving either towards hybrid or electric. On the food delivery front, packaging for sure needs to be compliant with food safety standards in each of the countries it operates in, and the reduction of packaging, right? Like what we talked about at the beginning, is like, do you want 10 Amazon boxes outside of your house every day, or just have them do it in one go? And I think one of this also reminds me of, I think one of the videos which our portfolio company Coupang showed during their IPO roadshow is really about, they were the first player in Korea in e-commerce to really introduce boxless deliveries, right? Because just the density of Seoul allows the delivery man to just drop off the actual goods without the box in front of their doorstep. So there are tons of things that we're doing that we can. I wouldn't say we're influencing. I think everyone, all stakeholders, are very conscious of this change. There's no denial of that fact, and they're all taking their own initiatives.
Yeah. And I would add, Radu, that we actually, as part of all our diligence of all the Vision Fund companies, actually go through an ESG due diligence to see what the potential impact is. And that, SBI itself is part of One Planet, which seeks to accelerate the integration of climate action to the management of assets. And so, this continues to be a key thing that we do think about, whether we invest directly in companies that obviously are having a direct impact, but we also want to make sure that there are, we're minimizing the impact from them.
Yeah. No, glad to hear. One of my friends is very much, I think we all should be actually. But anyways, he's very vocal about it. He posted actually on LinkedIn that he's been, trying to reduce. He's actually a vegan. Is very much in terms of reducing his own carbon footprint. What can he do? And he also posted yesterday that he invested in a fund specifically geared towards green and all of that, because ultimately that's how you make the most impact. And I think there's a reality check. If we don't do it by 2040, we will be significantly in trouble by 2050, even more so. And secondly, pragmatically, it makes business sense, actually, right? Most of this, you save cost as well with this. Talk about packaging, it's a pet peeve of mine, and I pissed with the amount of carton and all that kind of plastic. And I got, I'm not going to name the where I bought it from, right? But I bought a tennis racket or something, right? And you get this humongous box, and you're like, what? Who did this? You didn't need to pack it as if I had ordered a fridge. So it's a big problem that needs to be fixed. So glad to hear that you guys are doing something about it. And on that note, I want to thank both of you for your insights, for the time, and for coming here and sharing with our audience. And wishing you to keep up the great work, keep investing in logistics, in transportation, in mobility related scale ups. They are incredibly important. And we thank you for your work.
Yeah, thank you for having us, Radu. We really enjoyed the conversation today.
Thank you.
Thank you for listening to our podcast. If you like what you heard, be sure to go to www.elcotglobal.com and click the podcast button for all the show notes of the interview. Also subscribe to our mailing list to get our latest updates first. If you're listening through a streaming platform like iTunes, Spotify or Stitcher, we would appreciate a kind review. 5-star works best to keep us going and our production team happy. And of course, share it with your friends. I'm most active on LinkedIn, so do feel free to follow me. And if you have any suggestions on what to do and who to invite next, don't hesitate to drop me a note. And if you're looking to hire top executives in supply chain or transform your business, of course, contact us as well to find out how we can help.